Hello, this is Dan Cordoba. Today we're going to talk about leveraging your IRA to buy real estate. My name is Dan Cordoba and I'm the principal of Asset Exchange Strategies. I've written 4 books on how to purchase real estate in your IRA. And we've also received several awards for excellent customer service, and we'd like to talk to you about that at the end of the presentation. Asset Exchange Strategies has an A+ rating with the BBB. Since 2004, we've not had one single complaint. Let's talk about some of the retirement plans that we can use to buy real estate. First of all, there's a traditional IRA. Most of you have heard about that one. That's generally funded with pre-tax dollars. And then the dollars are distributed, are taxed at the end of the day. Roth IRAs generally are taxed before. Then the income, it grows tax deferred, and then when you take the distribution, it is tax-free. So let's take a look at some small employer plans that some people have that can be used for a self-directed IRA. A SEP IRA is a employer contribution plan. That means your employer makes the contributions for this plan. And these are pre-tax contributions. They can be high contributions, and they are also taxed upon distribution just like a traditional IRA. A simple IRA, both the employee and the employer can contribute to the IRA. And these are pretty easy to administrate. And in both cases, with a SEP IRA and a simple IRA, these are inherently self-directed IRA. And what I mean by that is that at any time, with the exception of one rule, at any time you can take that money out and roll it over to a self-directed IRA and buy real estate with it. Now, the only rule is simple IRA. The simple IRA had to be in existence for 2 years. Other than that, we can roll it over and get it started for you. Now, a 401k solo, that's generally for small companies where everybody is either a partnership or it's maybe a husband and wife that are working together in a company, and they have a small 401k in that company. The partners have to have a greater than 5% ownership in the company per individual. Now, in large companies and medium companies, we call these plans 401ks generally as a people. But really what they're called is profit-sharing plans. So sometimes these funds can be rolled over to a self-directed IRA. At the end of the presentation, just give us a call, and then we'll talk to you about whether that money can be transferred from an existing 401k. Now, Roth 401k sometimes is applied to some of these profit-sharing plans. And that's a bucket, if you will, inside of the 401k that is a Roth oriented. That means you've paid the taxes ahead of time. It's grown tax deferred, and then when you take that money out, it can either be rolled into a Roth IRA or you take the money out tax-free. Well, what's the difference between a traditional IRA and a self-directed IRA? Well, traditional IRAs are generally limited to stock market investments. And as you know, you have very little control over the ups and downs of the stock market and the influences. For example, mergers and acquisitions, interest rates, wars, rumors of wars, Fed chiefs, multiple Fed chiefs, presidential campaigns. All of these have an effect on the stock market and its influences on your retirement. Can you buy real estate with your IRA? Can you truly self-direct it with Charlie Schwab or Fidelity? The answer is no. And the reason is that they specialize in securities, and that's what they purchase, and that's what they know how to manage. And it's the plan document that defines what can be held in a custodian's account. The IRS says that there's only a few items that cannot be purchased in an IRA. And real estate is perfectly legal. Tax liens are legal. Notes are legal. Factoring is legal. All sorts of things are legal inside of an IRA. There's only 3 or 4 items that you can't buy. And what it really boils down to is with these other custodians is limitations. They don't want to, and they don't have the capability of managing assets like real estate. So let's take a look at the way we can purchase real estate with your IRA, and that's using a self-directed IRA LLC. The use of an IRA LLC provides the IRA holder with many advantages. First of all, you get checkbook control. Second of all, you get litigation, which means protection of assets beyond the state protection. All IRAs are protected by the states that are they're held in. But the IRA LLC gives it that extra measure. It gives you the ability to invest without getting permission. It also has lower custodial fees. That means there's no middleman. There's nobody to charge you taxes. There's nobody to charge you fees unless you've made a pre-arrangement with an individual to do that. So it's pure profit back into your IRA. So what does it take to create one of these IRA LLCs? It takes an advisor who specializes in these kind of accounts. They're different. They're special purpose. They're not the usual LLCs. And you have to understand how to deal with custodians. You have to deal with the IRS. We have IRS people that we deal with on a very frequent basis, talking to them about deals, how they fit into it, so on and so forth. So we have the, if you will, a connection with the IRS on this. We understand real estate transactions. These guys are really hard to find. So there are only a few companies that do these, and you want to make sure that you are tied in with somebody that you feel comfortable working with. And we hope that's us. The IRS code, let's take a look at that. 4975 defines a prohibited transaction. It also defines a prohibited party. Swanson versus the commissioner, that's the lawsuit that made all of this possible. Swanson had a similar transaction, or a similar structure, I should say. The IRS auditor thought it was illegal. Back and forth, back and forth. At the end of 5 years, went to court. The court sided with Mr. Swanson. So therefore, that gives us precedence. There's also a memo that came out after that says leave these structures alone. There's also private letter rulings from the DOL that support very similar structures to what we're doing. How about, can you use leverage with your IRA? Maybe you don't have enough to purchase that property. Let's take a look at that. Well, the title belongs to the IRA LLC, the title of that property in the middle of there. The IRA LLC holds that property. The bank provides some of the funding. The IRA provides funding. So what's the banker looking for? They're looking for commitment to the deal. They want you to have the IRA LLC in place and you're ready to fund. Sufficient cash flow to service properties that need debt. Usually that's a ratio of 1.2. What does that mean? That means that if at the end of the day that the net cash flow is $1,000, what they would like to see is really a net cash flow of $1,200. So they need 20% over what it costs to run that house as far as the rental is concerned. All right, the underwriting requirements are completely up to the bank, whatever it is that they do. We have no control over it. But typically, it's 50% down. So if you were purchasing a $100,000 property, they would like $50,000 in the IRA. 10% in reserve. That means $10,000 in reserve in this example. And the minimum purchase is usually $100,000 altogether. So what are the rules? Well, first of all, the loan has to be non-recourse. That means no personal guarantee. Also means you cannot supplement the loan with repayment if it needs more cash. That's why they ask for a 1.2 cash flow. They want to make sure that there's enough in there. And they also want to make sure that there's enough reserves just in case you have a vacancy for some period of time, or maybe there's a fire or whatever it may be, so you have the opportunity to pay back that loan. So let's take a look how it looks to the bank. We have the IRA LLC that wants to deal with the bank, and it's looking for a loan of cash flow of 1.2 again. The IRA funds the IRA LLC. The IRA LLC applies for the loan. The bank looks for that cash flow. And then the IRA LLC buys that money. So we're going to go a little further back. The funds are transferred from the custodian, placed into the custodian for legal status, funds the LLC. The LLC goes to the bank and says, I need a loan. It purchases it. Once the rent, the appreciation, all of that runs through the IRA LLC, through the bank account, then it starts to make a repayment back to the bank. So let's take a look at some tax reporting on this. A 990T is the correct filing form for this situation. Unrelated debt financing may apply. So we want to work with your tax professional to determine whether that will occur or not. Depreciation on the indebited portion is provided to the IRA LLC. Interest on indebited portion is an expense to the IRA LLC. And you're responsible for the IRA annual filing, not the custodian. So you want to know more? Please contact us, and we'll be glad to talk to you about this and see if your IRA qualifies. Call us at 866-683-5228, 866-683-5228, or you can email us at sales@myrealestateira.com, sales@myrealestateira.com, or you can visit our website, www.myrealestateira.com, www.myrealestateira.com. Thank you very much for joining us.